We detected an unusual trade on Meta stock worth about $6 million today. And what's also unusual about this is that today, July 31st after hours, Meta reports earnings. And so in this video, we will analyze this unusual option activity to find out how wealthy investors are trading Meta for earnings. Are they bullish or bearish? And then, based on this data, we will set up our option strategy to show how we are trading Meta for earnings. So without further ado, let's dive into the data as usual. As you can see here on the option time and sales tape, at 11:10, September 20 options at the 490 strike calls, 2,465 contracts. They paid a price of 24 for each of these call options. And so when we calculate the total trade, 24 times 100, since each option represents 100 shares of price, we know that each of these call options cost $2,400. And since there was a total of 2,465 contracts, this trade was $5.9 million, nearly $6 million. And so when we take a look at the chain for these September 20 options at the 490 strike calls, we can see here that the open interest is 4,271. This is actually greater than the volume that was being traded. So there is a possibility that they were closing out of these trades. So that is why this is a higher risk trade. If you want access to the lower risk, higher chance of profit trades, then make sure to go to our website. We'll put a link at the top here. Because this is earnings, it is a lot riskier than the trades that we share on our website. Now, as we explained earlier, they were buying these 490 strike calls for $24 each, which is $2,400. And you can see here, that is the risk on this trade, because if Meta crashes down, you can see that is a loss of $2,400, and it will also expire to that level if Meta does not break above this price level here by September 20. And this price level is $514 per share. And that is the risk with trading options. You can see that if it does not trade above this, the blue line here is actually all negative. So that will be a loss on this trade, because there is a very high theta decay of a -32 for each of these trades. But we can see this is a positive delta trade, so we know that this trader is going long bullish on Meta. Now the way we are trading Meta for earnings is different. You can see that our position is just here for the August 2nd options. Since this is just an earnings trade, what we did was for each of our trades, at the 510 strike calls, we sold 2, and we bought the 515 strike calls, and we bought the 500 strike calls. And so when we analyze this trade, you can see that this is a butterfly trade. Each of our trades costs $155 of debit, and so we can position size how much risk we want by deciding how many trades we want by adjusting the number of contracts here. For simplicity purposes, to demonstrate our trade, we are just using 1, and you can see here, if Meta crashes, we lose $155 per trade. If it goes up, you can see at about 510 at the blue line here, we can make a profit about $841 per trade. And so this risk to reward ratio, 841 is the reward divided by the risk of 155 is 5.42. So the risk to reward is very favorable, meaning we could potentially make 542% on this trade. So that is why we are trading this for earnings, despite the fact that this is a higher risk trade in comparison to the trades that we share on our website. If you want the lower risk, higher probability to profit trades, make sure to go to our website. We'll put a link over here. Let us know in the comments below. Do you think Meta will rally after earnings or crash down? As usual, please smash the like button, subscribe if you haven't. Take care and have a great day.